So hi everyone, this is an interest rate update and kind of seeing what's been going on in the market. There was a lot of pandemonium earlier this year in March, so pandemic hits, falls on the shores of the United States, we start reacting, interest rates are like up and down all around and it gets a little crazy, and then lenders pull back and start restricting their guidelines so much that some banks aren't lending unless you have a 700 credit score and 20% down payment, and it just gets really constrictive and restrictive. Well, I am excited and proud to say that the mortgage guidelines are easing up big time, and even though we don't have those kind of guidelines, we didn't ever have those kind of guidelines, you saw some restrictions as far as like 660 scores, and those guidelines are now easing up. And maybe if you had like a 640 or 620, you could get a loan, but you had to have extra bank statements or extra money in your bank account, extra assets, or lower debt to income ratios, and a lot of that is easing up. And so what that means is that I have some clients with 620, 630, 640 credit scores, and their credit is better than someone with a 660, 670 credit score. But somebody with a 670, 680 credit score still has a better credit score. So those clients that are below 680, 660, 640, etc., can get a loan. And that is pretty exciting with a good interest rate, with a very good interest rate. So interest rates are in the 3s. Sometimes you can get them as low as in the 2s, depending on what you want for your closing cost and what kind of loan term you're looking for. So interest rates are at an all-time low. And where do I see interest rates going into the future? I would say through the course of this year, they're going to remain low. As long as we have government backing, and the government is backing the mortgage industry, the interest rates will remain low. The only time that I see the potential for a spike is if the government were to pull back and banks were to get nervous on lending and lending to certain borrower buckets. Then they would pull back their lending guidelines and then interest rates, and then raise interest rates to try to get the cream of the crop client and then charge higher and higher fees and points to the lower credit scores, let's say below 720 versus above 720. That's the only thing I see potentially happening. So in the world of my office setting, we are hiring. I'm looking for 2 people right now, and I have a gal that is starting up. I'm pretty excited about her. Her name's Sydney, and she'll be joining our team in the next couple weeks. And then Marissa's taking her loan officer training. So this is a great time to be in mortgage lending. Interest rates are extremely low. I've also changed a couple processes within my team, and so we have these annual review calls. So you hear from me and my team on your annual anniversary, and then you have the opportunity to set up a 15-minute call. So if you need a 15-minute call with me, I'm happy to do it. So we have appointment slots for that. And that's been a really nice flow, because sometimes when you email, we go back and forth by email 5, 6 times. I'd rather just have a conversation with you, be able to answer your questions, and have a joyous catch-up. I had one yesterday with the McCrays. It was so cool. And it turns out that it wasn't worth them refinancing. Their current interest rate's 3.5%. They have 11 years more to go on their loan. They're down to $65,000, and I could have moved them to 2.5% at a 10-year loan. But when I gridded it out with the closing costs, I told them, why don't you just pay the extra $30 a month and get your loan paid off in almost 10 years without having any closing costs. So it didn't work out for them to make sense for refinancing, but we had a lovely conversation, and in it they referred me 2 people. So thank you, McCrae's. So I hope you enjoyed this video. I sure enjoyed putting it together for you and talking about where interest rates are at, where they've been, and where guidelines are at, and where they're going. Thanks for watching.